Hi guys, welcome back to Finpact. Has there been a banking crisis because of crypto? And what does this mean for us? Well, you guys may know that Silvergate Bank collapsed. Silvergate was pretty crypto focused. In November 2018, Silvergate announced that they had around 500 crypto clients. And then when they had their IPO in 2019, when they were listed on the New York Stock Exchange, they had around 750 crypto clients. Now, the thing is, they were a bit overexposed to cryptos that they bought during the bull run. So right post the pandemic. You guys know that after the pandemic, so many cryptocurrencies rallied to huge all-time highs. Now, this has been quite speculative. And I definitely think some of these prices are what people think the future potential of crypto is. Now, obviously, because the overall crypto market got hit, and we saw things that were coming in to shake up the crypto markets and the blockchain industry, especially the crypto markets rather than the blockchain industry, which has seen further mass adoption. And then we saw things like the FTX collapse that shook up the crypto markets. If you take a look at this CoinDesk article by Nikhilesh D, you can see that it says that Silvergate took out approximately $4.3 billion in loans from the Federal Home Loan Bank of San Francisco. Now, this sort of triggered a bit of a warning. And this did spark concern from the FDIC months ago. Now, the thing is, if Silvergate Bank collapsed, SVB as well, this is causing some worry in the banking system. So regulators are very, very concerned. And they said they're going to impose regulations on banks to limit how much their exposure is to crypto assets because of the nature of the industry and how it's incredibly volatile. And in this other CoinDesk article, is this a crypto banking bailout? It says that under federal law, federal authorities can declare a systemic risk exception when they agree the implosion of an institution may endanger the financial system. So the Treasury Department invoked this exception for SVB, so Silicon Valley Bank, and Signature. And this is after they consulted with Biden. Now, the thing is the government bailing out these banks for crypto? And that's how it's being seen, because they have to bail out these banks. So does that mean that any other bank that acts in risky ways would get bailed out? And if so, how would that impact the government's debt and their spending? And how would it impact the regular consumer? Well, they've explained this moral hazard very well in this CoinDesk article. They said that the regulator's use of the systemic risk exception may weaken market participants' incentives to properly manage risk if they come to expect similar emergency actions in the future. Basically, they're saying that the banks could become complacent. So if they get bailed out, then will they take such steps? And I think that's why they are looking to impose regulations on a bank's exposure to cryptocurrencies. Now, the thing is, if they impose these regulations where banks can't invest in cryptocurrency, then the banks may not be able to advance as quickly in emerging sectors like cryptocurrencies and blockchain and Web3 and, that sort of sector. And the reason this could also be a problem for cryptocurrencies themselves is because if banks can't invest in crypto and use some of their major expertise to evolve the industry, then it can be difficult to achieve mass adoption. But for the crypto companies, if there are no banks, then it can be difficult for them to get funding if it isn't through other ways that are outside of a bank. And they've said that what could happen in the future for crypto companies that are seeking banking services. It says it's almost a throwback to years past when crypto companies couldn't secure reliable banking services on their own. So could this put us substantially behind, or could this give the crypto industry room to grow? And that could also mean more profits for investors, especially if cryptocurrencies right now are currently stable in prices and that there is more room to run and the bull run can take some of the prices higher if we see the industry evolve and become better managed so that we don't have incidents like the FTX collapse and all that sort of thing. And that we can really advance blockchain technology and use it for use cases like gaming and the whole Web3 explosion. So guys, I hope this video helped. This is a summary of what's been happening. If you did enjoy this video, hit that like button and that subscribe button and that bell notification. Also guys, remember, this is not financial advice. Make sure you do your own research before you invest in anything. I'm not a financial advisor. And remember, cryptocurrency markets are highly volatile. Capital is at risk. You could lose your money. And you have seen that in 2020 and after the pandemic, how some of the prices are like 80% down even now. They are nowhere near their last all-time high. So just make sure you invest with caution and you do your own research and you try to understand the psychology behind investing. So consult a financial advisor. Thank you guys for watching and I'll see you in the next video. Bye.